but her family supported her.
पहले मैंने भी थोड़ी अपने हस्बैंड से आनाकानी की थी कि लोग दुनिया क्या कहेंगे, क्योंकि हमारा ये नगरोटा टोक बजीर पड़ता है, एक गांव है जहाँ पे मैं अपने जेठों से मुंह ढकती हूँ। तो सर मैंने भी आनाकानी की अपने घर वाले से। मैंने बोला जेठ देवर देखेंगे तो क्या बोलेंगे। बोलते जेठ देवरों ने घर में आटा नहीं डाल के जाएंगे, हमें ही डालना है। जब रिक्शा चलाती है कोई सामने आ जाए मुंह ढकने वाला, मुंह मत ढकना।
She was recently felicitated by the local authorities. She has become an inspiration for many women in Nagrota.
Breaking stereotypes, 36-year-old Seema Devi has become the first woman e-rickshaw driver in Jammu. Her decision to venture into a male-dominated profession will not only inspire other women but will also help in changing the conservative mindset of the society. With video journalist Neeraj Kumar, this is Sunil Bhatt reporting from Jammu for India Today.
CoinDCX, your gateway to crypto.
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. CBDT Chairman says changes to be made to the capital gains tax in Budget 2023, confirms yesterday's Business Today TV exclusive report that direct tax mop-up will exceed budget estimates this year. Air India faces a massive disgorgement order of 1,000 crore rupees handed the bill by US Department of Transport for not automatically refunding passengers for cancelled or delayed flight during the COVID era. Last-minute push takes Sensex up 249 points and Nifty up 74 points. Sensex closes at its highest level ever. Auto, oil and gas and bank shares lead the rally. It is India's decade, says veteran fund manager Prashant Jain in an exclusive conversation with Business Today TV. Listen to his top picks and deep market insights. India's trade deficit widens to $27 billion in October as exports fall by 17%. Government confident that pickup in consumption demand will improve exports. Prime Minister Modi puts energy security at the top of his agenda at the Bali G20 meet, opposes any restrictions on energy markets, says the crisis of essential goods and lack of financial capacity of the poor is a double whammy. It's the biggest ever disgorgement order against an Indian airline. Air India has been asked to pay a whopping $122 million as passenger refunds by the US Department of Transport. The amount translates to 987 crore rupees. Though owned by the Tata Group now, the burden of the payment is likely to land on its previous owner, the central government.
Even as the Tata Group looks at ramping up its presence in the Indian skies, reportedly planning a merger of the 4 airline brands it owns, a major roadblock has cropped up. Air India has been asked to pay up nearly 1,000 crore rupees as refunds and 11 crore rupees in penalties for extreme delays in providing refunds to passengers due to the cancellation or change in flights, mostly during COVID. The reason? Air India's policy of refund on request is contrary to the US Department of Transportation policy, which mandates air carriers automatically refund tickets in the case of cancellation or change in flights. According to an official investigation, Air India took more than 100 days to process more than half of the 1,900 refund complaints filed with the Department of Transportation for flights that the carrier cancelled or significantly changed. According to the US Department of Transport, Air India did not provide timely refunds, because of which consumers experienced significant harm from the extreme delay in receiving their funds. Air India is among the 6 airlines that have to cough up a total of over $600 million as refunds. Frontier, a US airline, has been ordered to pay $222 million in refunds. TAP Portugal will pay $127 million as refund. Colombia's Avianca will pay $77 million. Israel's El Al will pay $62 million, while Aero Mexico has been asked to shell out $13.6 million. Interestingly, the disgorgement order will have to be fulfilled by the government, not the Tata Group. The period under consideration is during the COVID pandemic, when the airline was still state-owned. However, Air India could take a hit if the US Department of Transport curtails its operations in the US until 1,000 crore amount has been paid. The airline has flights to 5 US destinations in its winter schedule this year. Bureau Report, Business Today Television.
Let's go across to Karishma Asudani for more on this. Karishma, what happens to this debt now? Does it go to the Tatas or will the government step in?
Well, absolutely. That's a very big question to ask because let's understand that this deal of Air India is going to Tata's actually happened only in January this year, while the issue of refunds that the US Transportation Department has claimed penalty for was in 2020 when the pandemic had, it was just the onset of a pandemic. Now, understanding from a broader point of view, the US Department of Transportation has asked Air India to pay a whopping close to $1 to $1.5 million as refunds to consumers for cancelling flights and not issuing immediate refunds, and rather only asking them to issue refunds on basis of request. They've also been asked to pay a penalty of close to $1.3 million for doing this. And this is not just Air India, but other airlines like Frontier and TAP Portugal have also been named in the list. But to answer your big question, if this will go to Tata or if this will go to Government of India, if it goes to Tata's, it's definitely not going to go down well with them, because Tata's had spent close to 15,000 crore to take over the existing debt of Air India. Of course, they also paid close to 2,500 crore more to Government of India in cash. A total deal of 18,000 crore was paid on official handover of Air India from Government of India to the Tata Group. But this additional debt was, of course, not discussed early, and this is something that's come out of a very unlikely situation. Now, my sources in Aviation Ministry tell us that if it goes further and it comes to Government of India, then Government of India will likely contest it against the US Department of Transportation, because they say that the situation of refund stands unfortunate because of the situation that existed then because of the pandemic, which was unlikely, and airlines had to take some kind of step to save their business and also to serve convenience to consumers.
Sensex closing at a new high today, with the US Fed indicating that it may slow the pace of rate hikes. Chances of an economic booster package in China and inflation falling to below 7% in India, also certain factors at play boosting sentiment. A late push took Sensex to a new closing high of 61,873. The Nifty was up 74 points and closed at its third highest level ever. ONGC was the biggest gainer among Nifty 50 stocks. Power Grid, ICICI Bank, Bharti Airtel and Ultratech Cement completed the top 5 list. Coal India topped the losers list today with a massive 6% drop. Others included HDFC Life, Cipla, Grasim and Bajaj Finserv. Udayan Mukherjee, our global business editor, and I earlier spoke with veteran fund manager Prashant Jain about his outlook on the markets. Jain earlier helmed affairs at HDFC AMC and is now director 3P Investment Managers. He has a very optimistic view of the road ahead. Listen in.
Prashant, it's great to have you on the show today. But you've been somebody who's always had a keen eye on value and valuations. Given that, if you were a hands-on fund manager today, would you be cautious about the environment and where valuations are, or would you be optimistic?
So there I am quite positive on the economic outlook of India, but I think the risk reward is evenly balanced in the near term. These are markets that are fairly valued, and we have prospects, or we have rising cost of capital. So I would say near term outlook, I would not, it's hard to forecast, but risk reward is balanced. But longer term returns are driven more by growth, and I think the economic outlook of India is probably the best that one has seen in the last many decades, and that's what makes one optimistic over the long term.
In your career, investing career, Prashant, when you've had moments like this where valuation multiples generally for the market are around 20 and we've got a rising cost of capital, have people had to be patient for returns, maybe wait 2-3 years at least before the returns come in, median returns? Or would you say that the markets have surprised? What has been your experience?
So, Udayan, I don't think, past experience of such instances will help because these are not valuations where things are setting at an extreme. And what's a 20 PE can also become 22 or 24 PE. And let us not forget that the earnings growth in India is likely to be in low to mid-teens. So I think these are reasonable markets, I would say. If you have patient capital, if you have 3-5 year view, debt equity should still outperform bonds by 3 to 5% a year. But I don't think past, similar situations would be able to guide us as to what will happen next year or so. And in any case, in last few decades, we have not seen the cost of capital rising in the West as it is now.
Leave the broader market aside and let me ask you about one segment of the market where there is a lot of news flow these days because of locked-in stock coming in and creating a lot of turbulence and volatility in these digital new age companies. How did you approach it in the last few years of your investing career at HDFC Mutual Fund, these digital new age stocks? And given that they have corrected significantly, if you were to manage money today, how much would you allocate to these?
So to answer this is extremely difficult because these are very diverse set of businesses. But let me share with you some thoughts around this. See, I think the excesses in this space were caused by the rapid adoption of digital in COVID times, and also the sharp collapse in cost of capital due to COVID. And that is what I think created this excess in this space. And I think both these factors are now reversing. And that's why we have seen significant corrections in this space. And I think these are very diverse business models. And in many cases, even the route to profitability is yet to get established. So I, for most of my career, have avoided business models that are not well established. Because I feel if you invest in such businesses, either you get in very early, which is not possible in the public market space, and by the time these models come to public, if they are not established, it's very hard to value them, and the risk reward is not favorable.
Fair enough. You're clearly looking at that risk-reward ratio being far more palatable at a time like this, Prashant. But I want to get your view in that context on PSU banks. It's a pocket that you've always tracked so closely. You've been known for your calls on some of these names. Where do you stand now when it comes to, PSU banking names and the kind of potential for return that we could see? We've had a phenomenal set of earnings coming through, but given the backdrop against which the economy is moving right now.
So I think just like in private sector, there are good and bad PSUs. And I don't think we should paint all PSUs in one brush. And I've been careful to invest only in sustainable businesses, both in private and public sector. And if you look at the good banks in the public sector, I think they are now trading close to one-time book. If you think 1 year, 1.5 years ahead.
Sure.
Which I think there is still some upside left in terms of valuations catch up. And I also feel that the outlook for earnings growth in banking is quite strong because credit growth is good, balance sheets are clean, provisioning costs are likely to be low. But these are not offering deep value in general. And as I said earlier, these are markets where bulk of the returns should come from growth, the business growth, the nominal GDP growth. And there is not much returns to my mind in general terms from change in valuations.
Speaking of PSUs, Prashant, another basket which has done very well over the last few months is defense. I remember there was a lot of excitement around defense as a sector back in 2014 when this government first came into power, and again in 2019. But those did not actually play through because the earnings and growth never sort of came through in the way the market was expecting. Do you think this time it is different? Defense is actually a sector worth betting on?
So then again, I think you have seen almost a 3x rise in prices in most of these companies. And in my earlier stint, we were reasonable investors in many of these names. But the price movement has been quite sharp. These are good businesses, very sustainable, with strong competitive advantages, with large order backlogs, with a lot of growth ahead of them. So I think these are growing companies, but again I would say defense generally the delivery schedules are quite elongated. To deliver an aircraft it takes years. So I think these are companies that should exhibit growth. It will not be linear growth though. It may be low in some years, it could be healthy in some years. So I would again come back and say these are multiples that are close to fair to my mind. Though, if you compare this with the private sector engineering companies, it is still quite low. I feel PSUs will throw up good companies once in a while, but to expect them to turn to be exceptional companies is less likely. And therefore, I am not very comfortable with valuing these companies at much higher multiples.
Let's take a very quick break. When we come back, brutal layoffs in the tech world, and is the LIC share a good buy after its astonishing results?
Battery swapping was a real game changer and is a real game changer as we go into other markets, large-scale markets.
Welcome back. India will continue to buy crude oil from Russia. Making this position clear was Petroleum Minister Hardeep Puri in an exclusive conversation with Business City TV. Puri also made it clear that in today's market, it's not only the oil producers but oil consumers who need to have a voice.
Well, from New Delhi, I'm joined by Union Minister of Petroleum, Oil, Housing and Urban Development, Mr. Hardeep Singh Puri. So thank you for speaking with us on Business Today Television, India Today Group. Primary question yesterday, OPEC, in fact, had slashed its growth demand in oil for 2023 because of certain economic instability. Would you have to comment on that?
I don't comment on OPEC. OPEC will make its demand. OPEC recently cut the production by a stated 2 million barrels a day. And it was clear then that if you limit the amount of energy in the market, if you limit it and it's less than the demand, prices will go up. And if prices go up, then the existing inflation in the system will be fueled further. And if inflation increases, then you're looking at the big R. And if you're looking at the big R, demand will drop. So in some ways, this is a self-fulfilling prophecy. I'm not saying this in the context of what OPEC has said. I'm making a general comment on what happens. These are the consequences, both intended and unintended.
Great. So one question, you did talk about sustainability in aviation and about the energy transition that India is looking at, but talking position of India on its, talking about India's position on oil, you've been, of course, vocal about it, even on the global platforms recently.
I'm stating our position. Our position is that we are a major consumer, and I think the consumers have a role to play in this game. Fact of the matter is, today, 100 million barrels of oil are consumed in a day. Now, if 5 million barrels go off the market and somebody cuts it, then the price is not going to be 90, 95. It will be 130 or 180. Now, that realization is known to the market. That realization is available with the market operators. So if you talk to somebody in the business, and forgive me, as against somebody who's anchoring a TV discussion, I mean, they will tell you what needs to be done. So that's why when I was at, what is it called, EDIPAC recently, and one of the participants in the panel was the minister from the host country, and the moderator asked him, what would happen, say, if the global energy situation suddenly demanded a revisiting of your position? He said, we are only a phone call away. We would revisit it. Because to sustain the global economy and make sure there is energy availability and broad affordability is not one person's or one country's concern. It's everybody's concern.
But we continue to keep buying from Russia, right?
Oh, absolutely, from anywhere. If you want to produce oil, let me know. We'll buy from you also.
With LIC culling out an astonishing 15,952 crore rupee net profit in the July to September quarter, investors have been hoping that the share will rise to its issue price soon. Will this actually happen? My colleague Sakshi Batra finds out in a conversation with Avinash Gorakhsakar of Profit Mart Securities.
I wanted to understand on the stock price movement that we saw right after the earnings, a 9% intraday rise. But despite that, we are seeing that the stock price still remains about 25% or below its issue price. So what will really help the stock really regain the lost ground on stock price?
No, I think markets would like to see consistency and continuity of the profitability, Sakshi. If this continuity and consistency is maintained, then I think, at least in the near term, one could expect levels of 800 rupees plus, although it's still away from the IPO price. My sense is that, the stock has been battered very badly and there was hardly any expectations from the markets when the Q2 numbers came out. So I think the markets will take some time. Probably they'll wait for the December quarter and the March quarter. But hopefully the second half of FY23 should be significantly better than the first half. So I think it's going to be another 6 to 12 months before we could see a decent rise on the LIC counter. But on a very near-term basis, 800 rupees plus looks very much possible, considering that, the market share of LIC by end of first half of FY23 was 68%. The APA business on a sequential basis was up by 45%. So these numbers are definitely reassuring.
Do you believe the high cost structure, the potential service gaps and declining market share in the individual business per se are actually posing as key barriers on the upside potential of the stock?
Yeah, I think, LIC will have to do a lot of legwork if they want to really compete with the private sector insurance players. And I think today the customer has got a very varied choice of, investment, insurance products which are available. So I think you're right in terms of technology, in terms of marketing, and in terms of the sales pitch, and in terms of the product mix. All these things need to be carefully done, and this may take a little more time. But hopefully, the direction has started, and I only hope it, gathers further momentum.
It's dark days for the tech sector, with Amazon joining the list of tech Goliaths that are letting go of people. Reports say the Jeff Bezos-owned company will lay off as many as 10,000 employees. While the contagion has not yet spread to Indian companies, the Desi startup ecosystem has been hit hard.
It is the largest private sector employer in the world, third only to the US Department of Defense and the Chinese Army. With more than 20 lakh employees, Amazon could populate the entire city of Nagpur. However, according to reports, Amazon.com is planning to lay off around 10,000 employees in corporate and technology roles beginning this week. The cuts would represent about 3% of Amazon's corporate staff. The online retailer plans to eliminate jobs in its devices organization, which makes voice-controlled Alexa gadgets and home security cameras, as well as in its human resources and retail divisions.
We're seeing it at Amazon, Apple, Microsoft, and others. The clock struck midnight on hypergrowth. And now you're seeing the cuts across the board. Amazon is no different. And this is really a rationalization of cost structure in slower growth times.
The news follows a wave of layoffs across the technology sector, which is wary of recession after years of rapid hiring. Just last week, Facebook parent Meta Platforms said it would cut more than 11,000 jobs, or 13% of its workforce, to rein in costs. The post, Elon Musk's Twitter has fired more than half its employees along with 5,000 contract workers. The entire tech sector has been hit by the global economic slowdown. Even the lucrative holiday season in the US has not helped sales. Analysts see tighter shopping budgets as households wrestle with high inflation and energy costs. Even giants like Apple, Microsoft and Snap are feeling the squeeze and have cut back on hiring plans.
Big tech's been tough on up to this point. Clearly going to see significant cost cutting, headcount cuts, I think, over the next 6-9 months as the recession's now on the doorstep. Now, I think as this dark storm eventually will pass, but you do not look at these tech companies as isolated. I think there'll be a massive ripple effect.
The Indian IT sector, which has a large part of its earnings from outside India, is also feeling the heat, but has not entered the meltdown stage yet. The startups, however, are shedding jobs. The list includes Byju's, Unacademy, Vedantu, Cars24 and Ola.
Well, it seems like the rapid boom witnessed by startups in the tech industry in the past 10 years is going through a rapid downfall as well. Many of these companies took up big-ticket loans that run in the billions, as well as were aided by VC money to expand aggressively without any profitability. And now that is biting these companies in the back because they are unable to manage their expenses sustainably, and hence they are cutting back on jobs. But how long will they be able to survive with this strategy? Nobody is willing to take a guess. This was Akanksha Chaturvedi for Business Today TV.
And that's where we leave it on the show tonight. Thanks so much for watching.